Welcome back for another Polygon Matic price prediction analysis video, and in this video I will be giving you areas of supports that Matic needs to continue holding above and also give you my pullback target areas. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Matic is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up, continue holding above the $0.65 mark, which is also a significant area of support, and give us another push to the upside, seeing a break above the $0.7 mark. And all this is playing out after we saw this massive pump after getting our low at around the $0.49 mark, where you can see that we saw this push to the upside, breaking above significant areas of resistances in a move that yesterday gave us a high above the $0.6878 mark. And there are chances that Matic has now given us a high in this move to the upper side, and maybe in the next coming hours we can expect a bit of a pullback before we can get a low in that pullback and then continue getting impulsive, continue breaking above areas of resistances and maybe get above the $0.7 mark. And if that is the case, then there are chances that in the next coming hours we might continue seeing further pullback on the Matic chart, losing the significant area of support at around the $0.6227 mark. And in case such a movement plays out and maybe we see a retest, then we can expect further pullback into a target area that can be given by the Fibonacci's, connecting the fibs from the low at around the $0.493 mark to that high over there. And that now gives me a minimum target area between the fib level 0.382 and the fib level 0.618. And I can mark that target area here on the charts, which is an area between the $0.6132 mark and the $0.5671 mark, which is an area which is my pullback target area in case we lose our significant area of support at around the $0.62 mark. We also need to have in mind that in case we continue seeing further pullback to that significant area of support, that area of support can continue to hold and give us another massive push to the upside, get above the $0.65 mark once more, continue gearing up and get above the $0.7 mark. That is the alternative scenario that we need to have in mind, and that is what I'm keeping my eyes on the short term here on the Matic chart. And jumping to the daily chart to now give you my long-term Elliot wave analysis and what I'm expecting once the bull market is here. You can see that back in 2020 we saw our lows down there before we saw that massive push to the upside, giving us an all-time high above the $2.9 mark, completing the formation of this wave 1 to the upper side. Then we started a corrective structure in the formation of this wave 2 into the minimum target area for the second wave, highlighted on the charts using this red target area. And this is an area that we have now fully maximized, and there are high chances that we now have a low in place for that wave 2. And in the next coming months or maybe weeks, we can continue getting impulsive and see this impulsive move in the formation of this wave 3. And the minimum target areas for the third wave can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, giving me a minimum target area at the fib level 1.618, and that is above the $5 mark. So that is what I'm keeping my eyes on the short term and also on the long term here on the Matic chart. And I hope that video was of much help to you.